The marketing spends reduction has been because of the attribution issues on new Apple policy. However, I'm very pleased to inform that we have expanded our marketing channels, we have found new channels, and we believe that the whole ability to spend more dollars in the coming quarters will be very, very handy for us as we move and increase our spends in the next quarters and get to more net new subscriber growth happening. The key KPIs in terms of cost per trial, monthly churn, activation ratios, they all remain same, range bound. So which means that underlying business continues to be very strong, and that is what really our team continues to focus day in day to ensure that our retention, engagement, subscription ratios are all very healthy. We had a 25% growth in monthly subscribers compared to Q1FY21 versus Q1FY22. And because of the marketing drop, sequential quarter, you would see a 5% decline in net subscribers, but that's very understandable given that there has been a very significant decrease in the marketing spends, but we'll come back on that piece. So that is something on the gamified learning. Just to summarize, I grew by 46% year on year, contributes to 40%, and underlying unit economics is very strong. With the marketing spend reduced, you are seeing very high EBITDA margins. But the focus here is to really increase the marketing spend in coming quarters so that you can get back to net positive growth on subscriber additions. The third segment, which is we have always maintained is our strategic growth area for us, is free-to-play gaming, where we have World Cricket Championship. This segment grew by 38%. This contributes to 4% of our revenues. We delivered 5.8 crores, roughly 6 crores of revenue. Our EBITDA margins also increased. Here, the key thing which we have always maintained that in our purchases is the key to grow the scale of revenue to break the to attain the scale velocity from the current orbit. And we are happy to convey that our percentage in our purchase conversion, which is the key metrics which we have always discussed with you, has improved in this quarter. Has improved from 0.1 to 0.15%, and that is what is giving us now a leeway to see if there is an LTV CAC equation possible for us to start paid user acquisition. Till now, we continue to grow this franchise organically, and this increase in revenue is also, I would like to highlight, is also because of 1 month of IPL in April. So you had in one very strong seasonality-led event happening for you to compare when you are comparing Q1 of last year versus Q1 of this year. Moving on to next two segments, telco. Our contribution of telco has come down from 16.5% in FY21 to 14%. As we've always mentioned that telco contribution will keep coming down with the growth of other three segments, namely esports, gamified learning, and premium. Our business declined 19% in Q1 of FY22 compared to Q1 of FY21. It is flat quarter on quarter. The decline from 8.1 crores in Q1 to 3.8 crores is predominantly coming from our whatever remnant India business is. We are that is already as we have always maintained that India business will not be there. And that's the decline. The rest of the portfolio outside India is pretty flat. And if you look at this results, you would have seen, and I've got a lot of feedback in past that the entire corporate cost is sitting in telco segment, and hence the EBITDA margins are not rightly represented. We discussed with our auditors, Grant Thornton, Walker Chindok, and we have allocated corporate costs across segments. And that is how we are going to continue to report going forward as well. We are Disney content acquisition, as I mentioned in last quarter. We are looking at integrating that with multiple telcos. Teams are working on showcasing the content and content strength to different telcos. And how this kind of proposition pans out in next 2 quarters, we will come to know. Today, we continue to maintain this as an experiment, and The green shoots are yet to be seen whether this experiment will get growth into this segment. Sports fantasy, our view is that the fantasy we have stabilized. We are looking at the profitable or a break-even growth here. The 1 month of IPL brought some cheer. However, it got kind of postponed after initial days of launch in April. It's going to resume again in September. Fantasy remains a sub 2% contribution for us. Our view here is that this segment is very large, and we will be playing a role in this segment, but very cautiously. It's a strategically important segment for us. How can we really grow this segment profitably, and how can we build liquidity without really burning too much of cash given these statutory issues? We are working on those plans, and our commentary on this segment remains status quo as we had mentioned in past. If I were to kind of summarize, very, very strong growth momentum led by strong business KPIs. We see notable KPIs of premium businesses of World Cricket Championship showing some positivity. We show a strong continuation of retention, engagement, unit economics, and gamified learning. We see very strong performance coming from Sportskeeda and Northern. So overall, we remain very confident of the overall story, coupled with all the macro factors which Nitish mentioned and the tailwinds in gaming across markets. With that, I will open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mukul Garg from Motilal Oswal Financial. Please go ahead.
Thanks. Hey Manish, good morning. Just wanted to start with your commentary on Kiddopia. Where are you getting the confidence on resumption of paid user addition from next quarter? You mentioned that you have expanded your marketing channels. If you can elaborate a bit on that, how do you see the marketing spend going forward, and can this lead to a change in CAC for you?
So Mukul, if you look at, we used to spend our money on Facebook, Google, and Apple. These were the 3 platforms which we used to do. And while Google is still figuring out for everyone, not just for us, how to really look at attribution solution. What has happened is that platforms such as Unity, Iron Source, and other direct deals with other game publishers, which have first-party data where the attribution issues are not there, we have been able to look at opening of those channels, looking at our onboarding funnel, looking at our funnel optimization. And that's where what I meant was in terms of expansion of your touch points with your consumers and getting more consumers to come on board. And that is really what I believe is that such a large opportunity of advertising which Google will solve once it comes back. These channels also performing very well. We'll have far many options to really acquire more users at scale. Rather than just be limited to the 3 touch points which we were earlier having. So we'll emerge much more stronger in terms of multiple touch points being available to us. Second question to your thing is to CAC. See, the way we work is that we have our boundary rates, and we could change that thought process of having $28 of cost per trial as the outside boundary condition tomorrow. But as of today, we are looking at $28 as our boundary rate and scaling our user acquisition, keeping that boundary condition intact. So that is a number which we have put rather than the market-driven numbers. And in that number, if we can get scale, great. If we can't get scale, we will not spend. So that's our theory, and hence the CAC doesn't really become a dynamic factor. What becomes a dynamic factor is the net new subscriber growth.
Fair enough. This second one was on the esports side. It was interesting to see the partnership with Riot Games on Valorant. Is this exclusive in nature, for Indian market for you? And second part of this was, again, the Krafton relationship. We recently saw an investment in a competitor in India. So again, how do you see Krafton's game plan and your partnership from a long-term perspective?
Right. So I will take the Krafton one, which is simple. Krafton invested in Loco, which is a streaming platform. It's a destination. And NODWIN is not a destination. NODWIN is a premium professional tournament IP owners and the content creator which distributes to these platforms. So it's a complementarity rather than competitive. And from Krafton's point of view, they are looking at India as their key market, as they have mentioned in their press releases. And for them to really have ecosystem play in gaming and esports is part of their thought process, where we can all benefit by working together and partnering together. So that is not a competitive, it's a complementarity is what you need to just understand between a content creator and a platform. To the second point on the Valorant, if you understand that these IPs, when you create from a long-term view, and that is how the nature of the conversation with the publisher is, because publisher also wants to really build a community on a continuous sustained basis. However, if you are looking for any agreements with publisher where publisher gives you right to hold exclusively, that is counterintuitive for a publisher, because publisher wants more and more tournaments to happen for their game to become more popular. So that exclusivity that only NODWIN can hold tournaments will not happen and will never happen. However, building of IP is a different ball game, where you are building BCC as an IP along with the publisher. That is where the IPs can keep becoming bigger and bigger, and that nature of that IP is to attract only the top professional players of Valorant, while the tournaments can happen at grassroots, as I mentioned in past. So you will always have publishers doing multiple grassroots tournaments with multiple players, while the professional tournament would be created for the professional players as a marquee IP.
Sorry to interrupt. May I request Mr. Garg to please rejoin the queue? We have participants waiting for the turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your question to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Mohan Kumar from JM Financial. Please go ahead.
Hi, congrats on a great quarter. The first question that I have is with respect to the subscriber base for Kiddopia dropping, but the revenues have continued to strengthen. Is that on the back of better pricing? And do we have some clarity on what the optimum marketing spend should be to kind of continue the subscriber growth pace going forward?
Absolutely. So if you look at your revenue growth versus subscriber growth, that's exactly the retention comes into the play of your monthly subscribers and annual subscribers. Given that the retention is very strong, and I would like to underline that numbers again, which I mentioned in the past, you have year one retention of almost 33% and 24-month retention of 14%, which means that the users which you acquired continue to be paying you for a longer period of time. And that's the advantage. So for example, last year, Q1, which users you acquired, 33% of them are still paying for you. And you had spent roughly around 71 crores of money in last Q1 of FY21. And that's the advantage you are carrying. It's not a value increase driven growth. It's the continuous retained user growth. And that makes this business intrinsically very strong in terms of unit economics. In terms of your next question, in what is the optima where the net subscriber growth will continue to be positive, I believe around mathematically it's around $1 million spent per month is what you require for you to have a net subscriber growth to be positive. keeping in mind the cost per trial to be range bound between $26-$28 and your current churn, which has been same for 24 months, and your activation ratio. So I believe $1 million is optimal. After that, anything will continue to increase the velocity of net new subscriber addition.
And again, on the Kiddopia front, so you had initially spoken about expanding into Europe, and that was put on hold because the first kind of put over there was not as did not seem as attractive as it was in the US itself. Are we thinking about expanding into the European markets, and is there plans of expanding into the age groups of above 7?
So again, just answering the question, the second one first. 7 to 12 is a very different audience, as I mentioned in past. It is not a homogeneous set, and it requires a different offering. Kiddopia team is very focused on 2 to 6, 2 to 7, and they will continue to increase that. Their market share today in US is around 4-5%. There is a P0 market in US. US will remain a P0 market for foreseeable future for them to increase their revenues 4x, 5x to get a 14, 15, 12% market share. As far as expansion is concerned, we will continue to experiment with European market and any other market in this year and see where we can find the sweet spot. But in terms of this market, this year growth, I see that all happening in US.
Thank you. Thank you very much. All the best for future quarters.
Thank you.
Thank you. The next question is from the line of Nitin Jain from Fairview Investment. Please go ahead.
Yeah, good morning and thank you for the opportunity. So if you could just elaborate a little more on, how changes in Apple's privacy policy impacts our ad spend. And if you could also share the subscriber base for Kiddopia as of July 2021. This is my first question.
So July 2021, we will not be able to give you because it's not information we will share on monthly basis. As of June, we had 321,763 paying users on iOS, and Google is additional subscribers of 30,000-40,000. To answer your earlier question, how does Apple policy really affect? As you would appreciate, when you are trying to optimize your user acquisition, you need to know an attribution from a click to actually trial to registration to subscription. And if you are able to monitor that funnel at an individual user level and then create some kind of cohort, you will be able to optimize it. If you are not able to do it, then it becomes a leap of faith and a blind spend. For a digital marketing, getting that attribution is very important. And if your device ID was a good attribution for you to really work on that optimization aspect. In absence of getting that device ID, you need to find an alternate way to identify that unique user. And that is the solution which now the ecosystem has to figure it out if Apple has stopped giving the device ID to the third-party guys. So your spends on Apple will continue as is because you are getting that. Your spends on anybody who has a first-party data, has its own attribution, will continue to happen. Your spends on partners which do not have first-party, they'll have to find solutions in conjunction with attribution platforms like AppsFlyer, Brands, Singular, Tune, all of them. So that is where so you have two choices. You can continue to spend blind, or you choose to really find alternate channels of spends where the attribution is very visible and tangible to you.
Okay. And my second question is, so Byju's is also entering into early learning aggressively. So how do you plan to tackle an aggressive competitor like them?
If you look at it, we are operating in a US market where it's not a new category creation, like this space of 2 to 7. In this, there are anyway very big entrenched players already sitting, and you have been garnering share from people like ABC Mouse or taking a share of wallet and time spent from YouTube or from Disney or from other Toca Boca and other players. So you are operating in a market which is already there. We are not approaching Kiddopia as in learning first. We are approaching Kiddopia as an entertainment first, fun first for the kids, where Ideas like motor skills, creative expression, self-expression, history, geography, maths are subsumed as a part of fun-based learning. Versus players like Byju's, which may appeal and attack this as a pure learning-first curriculum-based program. So there's a big difference in the approach we are doing. We are not following a curriculum-based learning edtech offering.
Okay, thank you.
Thank you. The next question is from the line of Saurabh Chatterjee from BNP Paribas. Please go ahead.
Yeah, thank you, team, and congratulations on the good set of numbers. Just one question on the Kidopia side. So if you could just give us some color on what has been the market landscape in US as to what has been the subscriber addition, or in terms of the marketing spends for ABC Learning Mouse, if you have any color or thought process on that after the change in Apple's privacy policy.
Unfortunately, I don't have exact numbers of the competitors, right? Because those are not public information. But anecdotally, from talking to different publishers and ad networks, right, it is an industry-wide issue in terms of attribution and hence the spends. What is also happening is that as now it's 26th April is when the policy was enacted, and you see a couple of months now have happened. There are many more solutions are coming into the market gradually to kind of find alternate ways for attribution. And that's what is it's the silver lining I'm seeing on the horizon. Because every game publisher, every app publisher is kind of really finding or want to find that support from Google or any other ad networks. Secondly, platforms like Unity, Source, and other guys have been able to kind of ramp up and demonstrate that they could give you that attribution for doing it. So I think overall, the industry is moving forward with new solutions to identify how to really work it. And good thing is that it's a level playing field, and it's same thing for every game publisher, every app publisher, big or small, across the world.
Okay, thank you. And just one small follow-up on the esports side. So any plans on adding new IPs in the next 6 to 12 months? And also, if you could just throw some color on the white label events that may be planned for the upcoming year.
So I think both these things are business as usual for us. Working with publishers for white label, identifying partnerships with them for whether India or new geographies, it's absolutely business as usual. Similarly, our key thing is to make our current IPs bigger and launch new IPs so that we can really have a catalog of marquee IPs in India and other geographies. That again is a stated strategy, and we'll continue to do it. Last year we didn't do it because of the COVID. This year we hope that by October, November we should be seeing the COVID impact receding, and we can launch new IPs in new games or new geographies. So that's what we will be looking at. However, it's a bit dynamic situation given the COVID situation.
Okay. Okay, thanks a lot. All the best.
Thank you.
Thank you.
Thank you. The next question is from the line of Deep Shah from B&K Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my first question is on the esports business. So we saw the finals of Indian qualifiers of VCC having close to 500,000 cumulative views. Do you see that at least some of these premier tournaments in the next 2 or 3 years may be becoming shifting completely to OTT platforms, or the market still remains very small for such monetization?
I think there are two aspects of it, and just so that underline for rest of the people on the call, the final of VCC, the PUBG launch, BGMI launch, my apologies, in India, saw more people watching it than in the final match where Jovic became the champion for the Wimbledon. So you can already see the kind of popularity of esports viewership in this country is really increasing by the day. I believe monetization on OTT platforms will follow this viewership, and as we continue to increase viewership numbers, OTT platforms will be able to attract more brands, whether endemic brands or FMCG brands as sponsors, and I see that happening completely. But the key indicator, if I may say, is the viewership numbers on these platforms, and that's very encouraging.
Right, sir. So the second question is on the gamified learning space. So one of your largest competitors in US raised a massive funding, and now with the Chinese regulations, it's unlikely that they'll invest anymore in those geographies. So do you think there is a case that competition will increase predominantly in your US markets or the European markets?
The US market is already super competitive because, as I mentioned, you are talking to a 2 to 6, 2 to 7-year-old child which is spending time on screen and getting entertained. As I've defined before also that if you were to look at this framework, you are looking at one side entertainment, other side learning. And on the y-axis, you are looking at paid and free. And the third axis, if I may draw, is curated, non-curated. So we are operating right at the center of entertainment learning, and we are in the paid version and a curated content. And in that is where you are attracting parents and psychographics of parents which want safe, healthy content where the child is having fun and there is a underlying learning which is happening and parents are happy about it. I think that is a very, very strong proposition of Kidopia, and that has helped us to grow, and we will continue to garner share because on the strength of the content and the engagement which is created by the content. So I'm not worried about it because this is a category where, frankly, it's not about money which can win, it's in the content engagement because child has enough and more options. And today, it's not a winner-take-all market. For Kidopia, they spend 17 minutes per day, they come 15 days a month. If the child who is using Kidopia is only using Kidopia, no, they will be using 4 or 5 apps. That's the nature of this market, and you're talking about share of time spent, you're talking about share of wallet. And as long as your parents see that child is happy and using the app again and again, and they see it's a good app, I don't see an issue in terms of our growth and continuing to increase our market share and become a household brand.
Right. Thank you, sir. I have a few follow-ups. I'll join back in the queue.
Yeah. Thank you.
Thank you. The next question is from the line of Sudhir Gantupalli from ICICI Securities. Please go ahead.
Yeah. Hi, Nitish, Manish. Good morning and congrats on a great set of numbers. Sorry to delve on this iOS 14 privacy policy update, but companies like Facebook and Twitter seem to be calling out a medium-term impact both on data quality and digital advertising spends. And we seem to be looking towards scaling back the marketing spends in the near term. Any thoughts on how the ROI on digital marketing spends, at least on the current 3 major channels you called out, may change going forward?
No, as I mentioned, the ROI is a function of 2 things. One is your cost per trial, and other is a function of your activation ratio, your retention numbers, and your ARPU numbers. Our ARPU, retention, as well as our activation ratios haven't changed, and they continue to be strong, and they are same for last 24 months when we were spending 300,000 to 1.9 million to now 600 million probably. So that is a very, very strong product KPIs which you have with you. As I mentioned to an earlier question, I think Mukul had asked, $28 is our boundary condition. And as long as we are looking at that as a fixed number and number of users acquired as a dynamic number, your LTV CAC equations are not going to change. And with more number of years passing, your LTV CAC is going to become better and better because earlier we were looking at 24 months, now we can look at 30 or 36 months. So we have that's how we are operating as of today, and $28 is what in the range of 28 we have kept our boundary condition.
Sure, Manish. And just on pricing, given that our ability to spend on marketing is kind of constrained at this juncture, any thoughts on easing pricing a bit, because I think our pricing has gone up with effect from the previous quarter. So any thoughts on easing the pricing a bit to encourage subscriber additions?
I believe there is a price elasticity opportunity available for us. We increased 7 to 8 towards the back end of the quarter. We have seen zero impact on any of the KPIs, whether it's activation ratio or the engagement or retention numbers. I believe there is an elasticity, and we will continue to experiment on the pricing and see that if there is any regression on the activation ratio or in the engagement. But I do see a price elasticity upside for us, as and when we want to exploit it.
Okay, nice. Thanks and all the best.
Thank you. The next question is from the line of Mayank Babla from Dalal and Broacha. Please go ahead.
Am I audible?
Yes.
Yeah. Thank you for taking my questions. Actually, I wanted to get some clarity on the sports Kida business. So I think you mentioned that the customer base increased from 11 million to 16 million. Am I right?
Monthly active users, yes.
Yeah. So that has increased by 45% roughly, but the revenue has increased almost fivefold. So could you just throw some light on this programmatic revenue?
I think there is a slight error in your maths. 11 million to 66 will not be 45, actually 450 odd percent.
11 to 66. Okay, sorry. Yeah, I thought 16, 16, sorry. Okay. And could you just throw some light on this programmatic sales, please?
Programmatic sales means that you are connected with different ad networks, and you are getting you are sharing your inventory with those ad networks, and they find a relevant fitment for the brands, and they are able to show those ads. So it's a completely scalable. As your consumer base keeps increasing in US and India, you will have more. And if your audience is relevant to the ad networks, you will continue to see the revenue uptick, and hence the user base becomes a good indicator to your revenue when you are purely connected to the ad networks. And it's a highly scalable, non-linear method of improving your revenues. And there is no manpower direct sales cost associated attached to it, and hence it's also more profitable.
Okay, very good. Got it. Thanks. That was my only question. Thank you.
Thank you. The next question is from the line of Jinesh Joshi from Prabhudas Lilladher Private Limited. Please go ahead.
Thanks for the opportunity. I have a question on gamified learning. So typically, how long does it take for an app like Kidopia to self-sustain on its own rather than rely too much on the A&P spends to register growth? And in that context, if you can share what has been the life cycle journey of other players present in the US markets like ABC Mouse and PBS Kids when it comes to balancing the growth and A&P spends. So that is the first question.
I see, if you look at it, in my opinion, for you to have a much more organic users really coming into your fold, you need to have lot more word of mouth and become a household brand. And for that, maybe 7, 8, 9, 10% share is minimum for you to really kind of get that. I don't think Kidopia at this juncture can expect to have an organic downloads outpacing the paid user acquisition, and hence the dependence on A&P will continue. When can they happen? We will have to experiment and figure it out. Today we have 321,000 paying subs. Can that be achieved when we have million plus paying subs? I think so, but it is yet to be proven. Unfortunately, we don't have the public data of the other competitors. Otherwise, we could have done some modeling to figure out where is the breakout point we can understand from others. And that's where it is a bit opaque, and we have to only learn through our own experimentation.
Fair enough. Sir, second question I have is on the esports segment, wherein media rights contributed roughly 49% of our sales in 1Q. So this being a major chunk of our revenue, can you explain what is the typical tenure of our agreements with broadcasters, and how often do the escalations kick in? And also, is it possible to share who are our top 3 broadcasting partners?
So broadcasting, our media rights and licensing revenue comes from 3 top partners, which is Viacom, Hotstar, and YouTube. Right. Out of that, Viacom is the largest partner, and the agreement is for 3 years. Out of that, 1 year has passed. And in terms of escalation, annual escalation, currently the business model is built on 2 ways. One is that you get the flat content fee, but you also get 4 minutes for every hour as in ad monetization slots, which you can go and sell in the market. We have not sold any of the spots in last 1 year because we are building the market, building the reach of it. But we believe the additional revenues will kick in if once we start able to monetize those 4 minutes per hour, which we get as a content creator to build our own upside beyond the content money which we get.
Sure, sir. Just to clarify, this means that esports can have an additional revenue stream coming in from advertisement inventory sales, right?
Yes. Yes.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Devesh Mehta from Dolat Capital. Please go ahead.
Hello. Thanks for taking my question. Can you share some more color on the in-app purchases for the premium segment?
I think in-app purchase is very simple. This quarter we saw our numbers roughly around 0.12 to 0.13% from 0.06%, which was earlier. And that really gives, as I mentioned before in our interactions also, Yogesh, is we need to keep increasing our in-app purchase conversion so that our average revenue per daily active user increases, and it gives us a cushion for us to do paid user acquisition.
Okay.
So this in-app purchase increase is a constant task for us and a constant game task for the game designers working on the game so that they can keep increasing. When we see in IPL, we see that this percentage in our purchase conversion increases because there is a inherent tailwind and excitement around cricket, and that also contributes to this increase of 0.1 to 0.13% from 0.06 to 0.07% in the month of April, which is what we are seeing in the numbers. And given that we have a cricket season ahead of us in September onward, we believe combination of the tailwinds of cricket season plus our own efforts should be really helping us to build on these percentage conversion numbers.
Okay. I have 2 further questions. First is that can you share the percentage of revenue for IAP in our premium for this quarter?
Yes. It was 27% if I remember, but I'll just give you. Yeah.
Does that answer your question, Mr. Mehta?
There's one more question. If in the post-COVID scenario for the esports segment, so can you give some quantification of how many events you are planning to relaunch? Like that would be Mount Dew Arena, which is still pending. ESL India Premiership is already done and number of new events. And in terms of the Valorant IP, you're saying it as that it is your own IP, but you are the official tournament partner, right? Or it is something different? Because either you can be the official tournament partner or it can be your own IP which you have built.
It is so multiple questions and I'll answer them. But first the IAP bit, let me just give you some comparison. Our IAP revenues grew by 75% from last quarter to this quarter, quarter 1 over quarter 1, and 153% quarter 4 over quarter. So you see that increase in revenues really being driven by IAP also. IAP contribution really increased to 27%. In terms of esports, if you look at Mountain Dew Arena, it is Dew Arena is an IP which is done along with the Dew. And as the market opens up post-COVID, then only that event may happen. If the markets don't happen, distribution doesn't happen, I don't think that event will happen. So it's again a dynamic situation. It's a property which we have been doing non-stop for last 5 years, except 2020 when, because of COVID, Dew didn't want to pursue this. So that's the status on Dew Arena. On ESL India Premiership, it's not done. It's a 9-month activity because we have 3 seasons. It is a flagship and it is happening, and this time we have made it even more interesting and bigger. And you will see that as it kind of starts getting into the execution and launch. As far as new Valorant is our IP in partnership with Riot. As I mentioned to some other question, there is no exclusivity or an official thing, because what you are really looking at is a publisher, and you're working with publisher to really make it big. What you get is a full support of Riot behind making this IP bigger, because if this becomes bigger, it becomes a marquee IP, it directly benefits them.
Okay, thanks a lot. That answers the question.
Thank you. The next question is from the line of Parthiv Dulasa from NVS Capital. Please go ahead.
Yeah, hi. Good morning, sir.
Hi, good morning.
Yeah, so just I had one question. Almost all my questions were answered. Just I have one question. So almost over 80% of the revenues derive from two main businesses, that is esports and early learning, right? Just wanted to understand your broader roadmap over next, say, 2 to 3 years. How do you want to grow this business, and what kind of growth as a company you perceive about this business?
So you're absolutely right. 81% comes from these two segments, 41% from esports, 40% from gamified learning. Right?
Yes.
I've always maintained that there are three segments which we are looking as growth. It is gamified learning, esports, and freemium. Freemium is very small today, and I believe that is going to be a real cracker going forward. And the fourth one is real money gaming, where we are sub 2%. This is a very large addressable market. We need to find ways to acquire some scale muscle profitably, and we will look at working on a strategy on real money gaming in going forward. So these are the four things which we are kind of really looking at. And I believe in foreseeable future, what you mentioned about 2-3 years down the line, I don't see esports and gamified learning contributing to 81%. I believe that freemium and RNG will also kick in, and you will have 4 competitive horses running for the contribution share of Nazara's portfolio.
Okay, but can you just give some ballpark figure of how much percentage growth do you perceive, whether they contribute 80% or not, but how much growth, percentage year on year do you perceive, and with the EBITDA kind of a margin will sustain at this 20%?
We have avoided giving guidance. We'll continue to not give guidance. Right. What we would like to do is look at the growth which these companies have achieved in the last 2-3 years. Look at the market competition which we have given, and then you can extrapolate.
Got it. And the margins will be around the same line, right? Around, give or take.
Yeah. And on the margin, you would see a great margins this quarter because of only one reason of reduced marketing spends in Kiddopia.
Correct.
We would love to invest back into more marketing as we believe the market opportunity is very large, and we want to have a higher growth rates with an optimal balance between growth rate and EBITDA margins.
Okay, sir. Okay. Thank you so much.
Thank you. The next question is from the line of Sundar from Spark Capital. Please go ahead.
Hi, Manish. Manish, couple of questions. The first one is on the KPIs of the gamified early learning business. CPT has become $22 to $28, and activation ratio at 70 and churn at 4 to 7%. Now, what I would like to get a confirmation from you is that last quarter we had CPT between 22 to 26. Activation ratio higher than 70%, and churn is between 4 to 6. So have these numbers slightly deteriorated, or am I reading too much into these 1-2 percentages?
I think on the CPT, it has definitely increased from 26 to 28. Okay. Barring that, activation ratios or the churn, they are range bound, and there is no alarm bells which you should read into it.
And CPT, should we get worried that it could further increase? Because last quarter, remember, you said 26 was the maximum that we'll stretch to, and we're already at 28. So how should we look at that?
I think that's what I mentioned, that it's a boundary condition, right? 28 is a boundary condition. If we look at growth and figure out a price elasticity on monthly subscriber base, we are okay to increase it even more. We are not worried about it, right? At the current pricing, because we also, if you see what we did, Sundar, is that we increased the monthly price from $7 to $8, right? right, where we increased roughly around 14%. And so we were very okay to take this to 28 from 26. So for us, given that monthly subscriber base contributes to 70%, our revenue price elasticity and ability to get more users with the CPT increase goes hand in hand. And if we see a elasticity really converting in revenues, we don't mind increasing from 28 also.
Okay, just in addition to that, then the monthly ARPU of 6.3 to 6.5 this quarter doesn't factor in for the complete price increase, right?
Correct.
Okay, perfect. My second question is on PublishMe. So can you throw some light in terms of the numbers? How should we look at it going forward? How large can it be to the overall scheme of things here?
See, Sundar, I think PublishMe is a capability acquisition as we had discussed in past. Okay, this is building a capability of publishing on ground in Middle East, which we don't have today. From a business point of view, today it's a publishing agency which helps game publishers to launch their games in geographies which need localization of content and marketing. And they have done in Turkey, and now they will expand their footprint into Middle East and carry their relationship with the current publishers from Turkey to Middle East. Right. In my opinion, this is a business which, how big can it grow? It will be a function of PublishMe moving from an agency to becoming a publisher in over next 2 years time period. So that you have already built credibility, you already have confidence of taking a game and making it big. And that's the strategic direction where this will become the game changer. In the meantime, what you are doing is you are building a platform or a foundation for you to become a publisher in the Middle East. So it's a slow process of building muscle rather than kind of taking a vertical uplift.
Right. So from the current portfolio that we have, how much of those games would be able, or PublishMe would give an advantage going into the MENA or Turkey region?
All of them.
All of them. Right. Perfect. Okay, Manish. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Nimish Shah from MC Investment Managers. Please go ahead.
Yes, thanks for this opportunity. Sorry, I dropped out in the middle, so pardon me if I'm repeating my questions. My question is largely towards Sportskeeda. So this programmatic revenues, so can you just explain what kind of revenues that are these, and are they kind of, seasonal in nature? So just some color on programmatic revenue.
So what does programmatic revenue mean is the key question. It means that you have an inventory on your platform. You connect it to the various ad networks which see fitment of their advertisers and the users which you have as a publisher on your platform, and they serve ads. So it's a non-human intervention. It's a data which you uploaded on these ad networks. They find it. They find a relevancy and hence they give you ads. And the better conversion and better whatever their KPIs are, if you are performing better, they'll give you more and more fill. So it's a very scalable business model where you are connected on the supply side with multiple ad networks and ad exchanges. And while you are focusing on growing your own demand, and your demand is coming from your more users, the volume of users and the time they're spending. So from a perspective, if you look at it, programmatic really is a very scalable model, and it's scalable across geographies. And that's why you see our revenue growth in conjunction with the user growth. So if your users are growing, it's a good indicator that your revenue is going to follow. And that's what the programmatic means.
Right. And does it also have some connection with kind of, with our sports mix as well?
It has, because ultimately users are here coming for their sports fans, and they are coming here to look at it. So one of the things which you would see is that Sportskeeda had WWE users, and 18 months back, not even 18, April 20, we launched esports, which has very strong adjacency with WWE fans. And esports has become almost 45% of the users, 25-30 million monthly active users, and it's the largest esports news site now. And it's almost kind of, the ambition is to make it the top 3 globally. India, there is no competition here. So what we have seen is the advantage of having the right choice of sports and the right content, whether it's a headline in short kind of a content or it is a long article. The beauty of Sportskeeda is that it does not have to create content from its own editorial team. It's a very strong 2,000 plus blogger network across the world, which enables it to get high quality content, and the tech stack allows it to curate it and surface it for the users.
Yes. Yeah, got that. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Hi. Thanks for the opportunity. My question is around freemium. If we look at the engagement, the daily active users, that has not really increased despite overall gaming, sort of rising. So do you think that, there is a scope to increase in, widen the offering, try more things and, look at more engagement at this juncture than, the profitability in, let's say, the sports engine at this juncture?
So if you look at our time spent per day for the 2 million broadly average daily active users, it's 46 minutes. And if you were to kind of look at it, it's top 1 percentile. And within that, if you look at top 10% of daily active users, they're spending almost 90 minutes a day. So time engagement is already in the top charts. And it's if you see the App Annie report, we have been constantly in the top apps in terms of engagement, and I don't see that as the KPI we should really work on. The KPI we should work on is how do we increase this 2 million daily active users to 5 million daily active users. And for that, the key lever is that how do we start doing paid user acquisition, which we are not doing today. And for us to be able to create that LTV CAC equation in a manner for a profitable scaling, we need the conversion of playing users to become paying users. And that's what I was referring earlier to, I think, I'm forgetting who asked. But that whole conversion matrix is a key matrix for us to create that lever of paid user acquisition and increase this 2 to 5 million DAUs. So I think that's the KPIs we are working on. Engagement is something we are absolutely in line with the global games. And just to give you a perspective, typically the casual games in India have 15 to 17 minutes per day in the time spent, and we are at 46 minutes at a large scale.
Okay, great. Thank you.
Thank you. The next question is from the line of Adit Shah from Vibrant Securities. Please go ahead.
Hello, good morning. My question is follow-up to the previous participant on the premium business. So the first question is, we have very high engagement there. Can you, if you can throw light on the retention numbers like say D1, D7, D30, that would be helpful. And given that we already have a high engagement, what is leading to say a not so optimal LTV CAC? Is it because of the CAC is too high, or we have to work more on the monetization side, as you have alluded on the deck with respect to more IAP revenues? That is number one. Number two is, I want to know your broader vision for WCC, because the company has been in existence for I think more than say 7-8 years now, and we have acquired it in 18 maybe. So we have spent around 3 years within our fold. So what is your assessment of how WCC as a franchisee and next wave as a company has evolved as a part of Nazara? And India cricket is a big opportunity, but even the best game is making less than 20 crores of revenue. So that clearly is a very big disconnect there. So what is exactly we need to do to tap that potential? That would be helpful, sir.
Right. So if you look at our retention, let me answer that. Our day 30 retention is in the range of 9 to 11%, which again is in the top 5 percentile. Yeah.
Okay.
Typically, your casual games have 3-4%, 2% kind of retention on day 30. If you look at day 365, we have almost 1% plus retention. Okay.
Okay.
So retention-wise, you have got your power users which play, and if you look at month 4, month 5, you are talking about 8-9% retention. Okay.
Okay.
So So retention, engagement, time spent is all done. User base, IP creation is all done. Your question is absolutely valid that in a country like India where cricket is a religion, why is this game on just a $3 million game, right? And what has the company done for last 6, 7, 8 years and with Nazara last 3 years? And why is it not scaling? There are fundamental 3-4 points. India in-app purchase is a 2-year story, 2.5-year story after demonetization and geo launch. It is not a 9-10-year-old story. It's a 2.5-year story. Just to give you some perspective, 2018 Indian IAP revenue was $50 million total. Okay.
50.
Right. Yeah. And today that has increased by 10x. It's a $500 million. Okay. Now, if you look at comparison to US, which is $10 billion, China, which is $14 billion, only mobile gaming I'm talking about since I'm comparing mobile to mobile. So you could clearly see the India market is at a very nascency when it comes to in-app purchase, right? And then when you're talking about the games which are making this $500 million, you are having BGMI, you are having Free Fire. The global games with global communities contribute to 70-80% of the revenue because it's the same phenomenon of 1990s where the TV was dominated by American content, right?
Yeah.
So it's a very nascent market, nascent business. What you are really looking at is a 450 million TAM. In that TAM, you are a 70% leader with a very strong engagement retention. And now the task is cut out to unlock that value of converting paying users to paying users. The habit of paying in India is growing very fast. You have 70-80 million players out of 480 million people which are paying today. Now that itself is a very low conversion at a market level. Now within cricket, since you get all sorts of users, your conversion will be lesser than the global games because you have more affluent users kind of coming into those kind of games. So there are intrinsic infrastructure factors which were holding this market back. Those infrastructure factors have evolved and opened up in the last 2.5 years. And now as gaming behavior, as a paying behavior within games permeates to 200-250 million people in the next 3 years, you will see the growth of homegrown formats like cricket to take off. And that's where the key task is to really build an IP, engagement, retention, and leadership. And that's where sports simulation games take a lot of time because you are trying to simulate the real-life experience of how you play cricket. And all of us have a very strong opinion on cricket. And we are very finicky about the simulating that experience. So this game has got that right. Now it's as the market really evolves, our own capability to really improve game design and focus from an in-app purchase point of view rather than just advertising point of view is what we have demonstrated in last 1 year, where our conversion from 0.02% has moved to 0.12% by launching a new game. And it's a journey we have begun, and we are far, far away from saying that we have reached even our intermittent milestone.
Okay. If I were to ask you, say, over the next 5 years, what kind of scale you want WCC to achieve in terms of revenues, would it be possible to share that?
I think it will be absolute crystal ball gazing, and I would avoid that.
Okay, sure. Just one last question. WCC will remain a mobile game because it's a very hardcore simulation game, or do you want to replicate it to other platform on console or PC?
It's a purely function of the business. It's purely a function of where you see your revenues coming, right? The game, today the quality of the game is, for us it's a 6 to 9 months effort to take portrait to a PC and a thing because the animation, graphics, gameplay, everything is of PC quality, right? The key question is, why should we do that? Is there a large user base on PC in India or South Asia, right? If you are saying that, listen, if there is a large base of people who want to play, then do it. But if you believe that India, South Asia is going to be remaining a mobile first, mobile only large market, and that's where the revenues are being built, even on global games in India, I think PC becomes a debatable strategy. Should you really spend even money, effort, even very small money and effort on that?
Okay. Any other genres you would be interested in within premium, say within sports? apart from cricket or other genres?
Our view is very simple, that we have demographics of 14 plus male and we have women gamers. These are the two key demographics under which we want to acquire more and more gaming IPs, free-to-play mobile gaming IPs. And that's what we will be looking at through M&A.
Sure. Thank you so much for the answers. All the best.
Thank you.
Thank you. The next question is from the line of Nitin Jain from Fairview Investment. Please go ahead.
Yeah, thank you for the opportunity again. So I have a question related to Kidopia. So given that the policy change happened in April, have our spends resumed to what they were prior to the policy change, or will it take some more time?
The spends are increasing every month, right? Have they reached to the pre-policy change? No. Will they reach? Yes.
Okay. And is it possible to provide Kidopia's market share in the US market, or?
So you can extrapolate it. Total universe is around 25 million kids of 2 to 6 in US. Roughly a million sampling is what Kidopia has happened. So we are roughly 4-5% market share in terms of sampling. That's how you can really arrive at.
Okay, sounds good. Thank you.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus Securities. Please go.
Yeah, sir. Thank you for taking my questions. So the media rights revenue seem to have not grown YOY. Any reasons for the same? And if you can also give a comparison, the number of white label events that you did in this quarter versus last. And what was the revenue contribution, the sponsorship in this esports, if you can give, please. Thanks.
So if you look at the media revenues, will have not increased predominantly because of your COVID, right? Your live tournaments, your viewership, for brands to really come in, all of that has been a very, for the OTT platforms to really launch and go very big has been a very tame affair. Okay. So I see that really happening and increasing as the viewership continues to increase. More and more money will come into this segment. On the number of white label events, how many did we do and how many actually we did last quarter? I need to get back to you because I don't have that exact numbers with me. But Rahul can give it to you offline and or post it as part of the earning call transcript. We can do that.
Sure. And sir, what is the revenue contribution of sponsorship in this quarter?
So sponsorship is purely a function of marquee events. If you see Nordwin business, it is very loaded towards Q3 and Q2, Q3, especially Q3, not Q2. And that's where you will have your India Premiership happening. You will have other IPs happening because that's a time frame when the festivities are around. There are no exams. So October, November, December is always a big quarter. And if you see last year also, that's what you see. And then pushing it into Jan, maybe Jan, Feb. Quarter one is always, quarter one, quarter two are, let's say 40% first half, 60% second half is what Nordwin always you have seasonality.
Got it. And secondly, sir, if you can highlight what kind of partnership you have with the Riot Games for this new IP. Is there any license fee or revenue sharing arrangement you can talk about? And also, Valorant, as I understand, is a PC game, right? So do you think it can become big in India, given that we are largely a mobile-based gaming market?
You know my view on mobile versus PC. I think PC has a very strong, dedicated community, but it's not in volume. I was myself surprised, in spite of being a PC game, the viewership it attained, right? Which means that you are talking about a very highly engaged game base when you are doing these esports tournaments versus a large volume-based events which could happen with BGMI and other games. As far as the relationships with the publishers and not just the Riot in this case, when you build these IPs, it's a symbiotic relationship between publisher and you. You neither pay to the publisher as revenue share or licensing fee because the popularity when you create the best teams competing for the championship of India, it really spurs more and more people to go and play their game and do more in-app purchase. So truly publisher makes money by creating more aspiration, and that aspiration is created by us. And we make money through monetization, through brands and media rights.
Thank you. Ladies and gentlemen, due to time constraints, that's the last question for today. I would now like to hand the conference over to the management for closing comments.
Sure. Thank you. So, Nitish again here. Just want to summarize by saying that, we are now at the inflection point in the gaming industry where I strongly believe the unique Nazara DNA as well as the Friends of Nazara network strategy will help us leverage and grow on the back of strong tailwinds in the gaming industry, and we really look forward to the exciting times ahead. With this, I would like to thank everyone for joining the call. I hope we have been able to answer your queries, and if there's any further information required, kindly feel free to get in touch with us. Thank you very much, and have a good day.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.
Thank you.